YouTube, welcome back. You join me on Friday, the 10th of January 2025, and Happy New Year to you all again. Just on a dog walk, so if this pauses and cuts in and out, it's just because my dog has probably done a little bit of his business, and I'll go and pick it up, but bear with me. So you join us today because we're going to be talking about the mindset, the psychology of what a losing and a winning trade looks like. Obviously, you have wins, you have losses, you're a year in, you're 20 years in, it doesn't matter. You still have losses. So we're going to talk today about how you manage them mindset-wise, psychology-wise, because for a lot of people, that is their downfall, and that is the last thing that's holding them back from consistency in the markets. So we're going to talk about both losers, we're going to talk about both winners, and we'll take it from there. Now, as a bit of an overview, you know, both winners and losers, they evoke all different types of emotions. Losers obviously will evoke certain types of emotions, typically anger, frustration. You guys all know what I'm talking about. Winning trades can offer the opposite. Oh my goodness. Winning trades can offer the exact opposite. You know, elation. You're ecstatic. You're super happy. You think you've cracked it. So imagine a spectrum, because we don't want to go anywhere near either end of that mindset, that psychological spectrum. So every day you turn up, every trade you take, you want to be making sure you are somewhere around about of that middle of that spectrum. And what I mean by this is, obviously, if you're in your first 1, 2, 3, 4, 5 years, things are naive, things are new to you still. If you can do your best to get into that middle part of the spectrum, then brilliant. It comes with time, like anything does in this game. But if you can adopt these principles in today's video and adopt these habits, you'll get there sooner. It will become a lot more natural to you sooner. So every losing trade you have, or every winning trade, or basically any trade you're in, before you know the outcome of it, and when you know the outcome of it, you want to try and remain as level-headed as possible. So a few things I do for this. Before we go into the winners and the losers, as I said, every trade should be thought of in terms of percentage gain. That immediately takes away the monetary value, because we are human. We are all human. From day dot, from when we're born, we are taught we shouldn't lose money, and we should keep money, we should save money. So as soon as you start seeing red numbers going against you, it starts evoking fear. It starts making you waver from your trading plan. It may even make you start waving away from your edge that you have that is proven. So you can see how it gets pretty catastrophic quite quickly. So this is why we need to remain as level-headed as possible, because with our then winners as well, if we start seeing it go in our direction and we are not still on that spectrum in somewhere in the middle, you start getting much more ecstatic. You might start over leveraging. You might start scaling into positions that actually they probably weren't appropriate to be scaled in on. And I'm a big avid believer of pressing your advantage when you have a winning trade. That is how you make a lot of money, a lot of percentage gain. But there are times to do it, there are times to scale in, and there are times when you just leave it alone. So what I do for this, as I was just getting at, thinking percentage gains, okay? That way, it's all very, very clear. Everything's very standardized, it's easily trackable, and you're not dealing with numbers or multiple numbers per se. The second thing to that would be, make sure you get your risk to reward is healthy and it is good. If you've seen any other videos from me, you will know I take the least setup I will take will be a 1 to 3. So if I hit my stop loss, we are down 1%. And if it hits my targets, we are up 3%. A lot of my trades will be 3% targets, 3.5, 3.25, something like that. And because I'm more swing trader, because I'm more 4-hour daily, these positions are sometimes 150 pips, 200 pips, 250, 300 pips, and that's normal for me. And so what you can imagine, because of the number of pips that are on offer there, it gives plenty of opportunity to scale in on things like the 1 hour. It gives plenty of opportunity to scale into the 4 hour. So that 3% becomes 4%, 4.5%, 5%. At the time of recording this on this Friday, I'm 5.7% up, and I've had one trade this week on GBP CAD shorts. It was an initial entry, 4%, and then the scale in on top of that for 1.7% with a 0.5% risk. So anyway, I digress. So when it comes to, again, managing these things, the reason I'm on about risk reward is because you can have 3-4 losses on the bounce, okay? what that does to a novice trader, it sends them into a real negative spiral emotion. It makes them overtrade, it makes them FOMO, it makes them see setups that quite frankly aren't there. And they're taking setups that are below suboptimal. Okay, so by having a 1 to 3 as a minimum, you can have 6 losses and you only need 2 wins to get back to break even. If you're trading a 1 to 1, for example, which a lot of lower time frame traders preach, a lot of these ICT people, all of these people that scalp as well, if you've had a 6 loss losing streak, which is possible, it happens, it's the markets, for goodness sake, you need 6 wins just to get back to break even. 6 wins on the bounce. The odds and the probability of that, even if you're 10 years in like me, having 6 wins on the bounce, the probability is quite low. Within 6 trades, typically for me, 2 of them might be losers, 3 of them might be losers. But because I have a brilliant risk to reward every single time, and I'm disciplined with that, I still make a really nice percentage gain each month, each quarter, each year. So you see what I'm getting at? With a better risk to reward, it takes the psychological pressure off the losing trades, okay? Because you think in your head, well, actually, I'm 3% down, but I'm only 1 winner away from being back to break even. And there's something about that in your mind that's incredibly reassuring, especially, again, novice to moderate traders who are still in the first 3-4 years of their career. When it comes to winning trades, the opposite end of the spectrum to the losing trades, please remember this. If there's one thing you take from this video, it is this. Confidence, especially when confidence is high after a few wins or a really good trade, one trade in its own as a win, confidence is not a confluence. I repeat, confidence is not a confluence. I do not care how confident you are in your next setup. You shouldn't be looking at it like that. You should be looking at it as in, is this my optimal setup? Is this the optimal setup that my edge tells me is my optimal setup? Okay? Because when you're in a trade, if you are overconfident, remember, confidence has nothing to do with probability. It has nothing to do with in terms of managing that probability or increasing that probability in your favor. They're completely irrelevant. Trading, as you know, is a probability game, a risk management game. It's not about being right or wrong. It's about pressing your advantage on your winning trades and mitigating your downside risk in your losing trades, which are going to be inevitable. Anyway, so with confidence, you've got to keep that in check as well, because again, this is to help with your winning trade psychology. Because if you're overconfident, like I said earlier, you will scale into trades that aren't quite ready to be scaled into, or you will add trades to potentially a losing position because you are still confident in that setup. Now, the second point to managing a winning trade is if you're one of those traders in, again, your first 2, 3, 4, 5 years where you're incredibly ecstatic after a win, you do not, and I repeat, you do not jump into the next setup, even if it is a optimal setup. Now, there's a caveat to this. Once you are more experienced and you're able to keep that level-headed, that level middle ground on the spectrum I talked about earlier, then of course you go on to your next trade if it's there, if it meets your optimal criteria. But if you know you're not in that position, you need to be very frank and honest with yourself. If you know you're not that trader yet up here, then if you are ecstatic after a win, you shut your laptop, you shut your monitors, you go to the gym, you go for a walk, you do whatever the hell it takes to bring you back to level grounded, okay? Because overconfidence, it comes back into the point I've just made. It starts making you potentially see things that aren't there, or even if it is a genuine optimal setup, but you're elated from the prior setup, you might end up oversizing, over position sizing, over leveraging, thinking, you know, you're undefeatable. And we've all had that mindset at some point in our journey. And typically 99% of the time, it's always ended one way, and that is a losing money or a losing setup, which ends up taking you out for a lot more than just 1%. So please don't be that trader. Listen to this video, take in the advice, and you will be just fine. Now, traders, last but not least, quite frankly, there's a lot more I could talk about in terms of both managing your losers and winners up here in your mind, but I don't want to ramble on. I want to keep this concise and educational as much as possible. So if you want any more sort of tips, tricks, advice, check out the Instagram. I post on there pretty much every day, and it's all honest, reliable, trustworthy advice that you can double down on. Take care, guys, and thank you so much for watching as usual.